Test, test. Hey, everybody. How you doing? Oh, I can't start yet. All right. All right, I think I'm on now. It wouldn't let me start because I came in a little bit early. But hey, how's it going, everybody? 40 Finance Channel, Jeff Beers here. It's been a wild week for me and my stocks. And I think, broadly, what we're seeing in the market is finally some of these projections, these lofty projections that so many growth stocks have, reality's starting to set in. So I would argue that for many stocks, the expectations are very, very high. The multiples are very high. And what we started to see this week and even last week a little bit with maybe Amazon is in Apple too, to throw that in, is just the fact that these expectations are higher than reality. And the world is not back completely to 100% capacity, certainly not from a supply chain, certainly not from the standpoint of people getting out and doing things. It's better, but we are not at full capacity. So that was something that came into play with my stocks, and I had several that reported earnings this week, so I'm just going to go through those and let you know my thoughts about each one, and then we'll do some questions. Thanks to H. Montero for putting a comment in. Good to see you. Appreciate you testing that for me. Let's lead off with today's news. And I'm going to switch over, and that was Draftkings. So this was one that I was excited to see. This quarter, which goes through September 30th, does represent a big quarter for them in the sense that September is a big NFL month. It's not a full month of NFL revenue because I believe the first game was approximately September 11th. So the first full month of NFL revenue will be reflected in Q4, as will the start of the NBA season, hockey, etc. But long story short here, we had revenue of $213 plus 60% year over year. It did miss the expectation by about 10% on some quick math here. I was relatively happy with it myself. Monthly unique players increased 31% compared to last year, so that's a positive. Users, payers, whatever you want to call them, super important for this company. Average revenue was $47 in the third quarter, 38% increase versus same period in 2020. So that is super healthy, staying on the correct trajectory. Draftkings delivered strong growth in monthly unique payers and ARPU. Let's see what else we got. Without contribution from sports such as NBA and NHL, which resumed their seasons in the third quarter of 2020, but of course this year they're resuming their seasons on time, or I guess in the regular schedule of October. Draftkings is increasing the midpoint of its fiscal 2021 revenue guidance to $1.26 billion, narrowing the guidance range to $1.24 billion to $1.28 billion. That was shy of consensus, but that is a range, and it doesn't mean they can't beat it. And like I led off with, it's always hard to tell what this guidance, where people pick those numbers from. So this, if anything, I would say there's some reality setting in here, but I wouldn't say that it's extreme. DraftKings is also introducing 2022 revenue guidance, 1.7 to 1.9 billion. Consensus, though, of 1.81 billion. So if they hit the high side of that, they would beat today's consensus, and that would equate to 43% year-over-year growth based on the midpoints of blah, 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 blah. So I would say that revenue guidance for the next year is relatively on track. If we take a look at the stock, let me get a shorter chart here. 5-day chart. Starting on November 1, we were at $49, and through today, sinking to about $44. My quick opinion on Draftkings is I thought it was a solid report. I don't think necessarily that it was a barn burner, right? It should not influence the stock price a ton, in my opinion. You're down 1.3% today. However, I'm holding my positions. They're on track for everything I thought they would be doing at this time of year. And I think that, you know, a company like this, every earnings call is going to be crucial, and they got to knock it out of the park in Q4. And I think what I read in there, I don't see why they wouldn't. Okay, so that's the good news with Draftkings. However, because the gambling sector had some negative earnings reports, Barstool, MGM or Caesars, I can't remember, but I saw a couple like slightly negative reports come out. This could easily get dragged down a little bit. It wouldn't surprise me on a bad day to see it around $40. Not sure if I would add there. My cost base is at 35, so not sure I would add there. But I'm going to hold because if you've been watching the channel, you know that 2022, a lot of stuff got pushed out of 2021 in terms of United States states being legalized for gambling. Got pushed back big time. Hopefully that backlog catches up in 2022. I live in a state called Ohio, and the expectation from consumers anyway is that Ohio will approve in spring, and if we're lucky, get that rolled out before 4th of July. So next year's big for Draftkings, and at this point, I would say I wouldn't touch this stock myself at my current cost basis through at least football season of next year. All right, let's take a look at the next one. And this was my best one, so this is the good news. Etsy just did a phenomenal job, and I'm very happy with my Etsy investment. And you know, they are always going to have some people who are like, think that they're pandemic only, and you know that they're going to go back to normal. They're doing great stuff. GAAP EPS of 62 beats by 7 cents. Revenue plus 18% year over year beats by 13 million. And even though this isn't a huge revenue number, or you know, comp, if you will, what it does show you is that even in a world where we can still get out to stores and stuff, Etsy holds value with consumers. So that is an important thing that they did need to show, is that malls and open shops are not going to take away from Etsy. And so far, so good. Gross merchandise sales plus 17% to $3 billion. Marketplace sales up 12%. Now, what's this one? Consolidated GMS. I can't describe the difference to those off the top of my head. I'd have to read the definition. Gross merchandise sales from paid marketing was 17%, so nice healthy portion of organic in there. Q4 revenue 660 to 690, 10% year over year growth at the midpoint. Consensus was a little bit higher. Let's see where this stock is today. I'm going to do the 5-day again just to give us a good look after earnings. And you see the lift, 265 is where we're at, down about 2% today. Heading into earnings, you were, let's just call it 235. Got a nice boost up to 275, and it sort of dragged down from there. However, as far as I'm concerned, Etsy did a phenomenal job. It wasn't plus 6,000%, but they're chugging along. There's a lot of details in the Etsy earnings report that I'll get to in a separate video. But A+ for Etsy in my book. I'm lucky that my cost basis is in the 140s. I want to say 147 off the top of my head. So I'm up over $100 a share on that, which is great. Have to think about if I'll add 1 or 2 Etsy shares here or there. We shall see. All right, let's get into some of maybe the not so goods. SABR, which is a travel technology firm, basically booking software and stuff for hotels, airports, all kinds of stuff. This is a cheap stock. This is under $10. This is a COVID rebound play for myself that I bought in at $11, and I kind of sort of expected it to be at least 15 by now, but international travel just has not materialized as quickly as needed. GAAP EPS missed by 8 cents, and you can see on the GAAP side, they are minus 75 cents for this quarter. So this company is still losing money. Revenue of $441 million, misses by about 10%, somewhere in there. The shares went up, but you see the comments, broad global travel recovery. We will narrow our product offerings and intensify focus on our core. I'll tell you what that means here in just a second. But let's take a look at the movement for the week. Go 5 days. So we started here, 1075. This is where I was feeling good. My cost basis, I think, is right at $11. So I was like, cool, let's have a breakout quarter and push it over my cost basis. Unfortunately, with the guidance and the talk about international travel, it actually went down to $9. I'm not sure if it ever got under 9. Right there's an 898. And then this big boom today at plus 75. So let's talk about a couple things on SABR. The boom today is from Airbnb and Expedia. So if you didn't see those announcements, they both crushed it. Leisure travel appears to be in a very good place. And I would say that leisure travel heading into the holidays, minus some new Delta variant or something that we can't foresee, it looks like leisure travel is going to kick ass in the Q4. If Q3 was any indication, okay? So that's good news for SABR because it's a volume-based industry. What did happen, though, with SABR was 2 things, okay? That's kind of like got people with mixed feelings. Number one, they sold off a channel of their business that manages basically flight crew and airport operations, so not customer-facing. So they sold that off to another firm, and it eliminates some staff. They get a couple bucks for it. I think it's a great move, but there is consolidation there that I think some investors worried about. It was a small portion of what they do from an income level. And then secondarily, Expedia, during their press conference, came out and said that they're sort of consolidating operations and they won't be using whatever tools they use from SABR going forward. Now, SABR came out, and if you can look it up yourself, but basically the Expedia line that they were getting, the revenue they were getting from them was almost a nothing burger. It's a negative, right, every time you lose a client, but it was not something that I think will materially impact the company over next year or certainly the out years. However, we do need to watch as stockholders, because whatever reason Expedia left to sort of do their own thing, that could happen to other clients. And so there is a little bit of risk in there. I need to do some more research, but I'll do an update video on SABR. I can tell you right now, at 989, I could maybe add something to my SABR play. I do think that the momentum is going to be good heading into next year, Just not sure, though, if I need to buy more shares on this one. That's what I have to think about. Do I want to lower my cost basis? If I do, it won't be till next week or after, because this run up right now of plus 7% is based solely on Airbnb and Expedia sort of tailwinds, right? And so we'll let that settle down a little bit. All right, poking in the chat real quick. Montera's looking for Moderna. I can look at that in a little bit. By the way, like how you have Wolf of Wall Street and other Big Short. Yeah, thank you. I'm glad you noticed that. Rocket. And I am going to go over Rocket right now. All right. Rocket stock. Rocket stock jumps after beating Q3 estimates, lowers Q4 guidance. Looking ahead to 2022, we expect to exceed 10% share in the purchase-heavy mortgage market and continue to leverage our platform to grow and scale other businesses, real estate, auto, blah, blah, blah. So purchase mortgages, this is big, that they would exceed 10% share in purchase mortgages. The boom in Rocket has been in refinance so far. They have said time and time again that they are focused in the purchase space to grow that business, and so far, things look good for next year. So this is a win. And the negative side of this was that closed loan volume capping out at 80 billion for Q4 is the projection. That's down from where they were earlier. So you could get some negativity from that. Let's see. Let's do Q3 results. Diluted EPS of 57, beats the 48-cent consensus estimate. Down, though, from last year, and we knew that's about Rocket. We knew that 2021 was going to be lower than 2020 because what we've seen with interest rates and how big the refinance boom was. So while this is negative, I would say it was expected. Revenues beat 2.96 billion estimate, up to 3.2 billion. However, you see it right here, down from a year ago. Closed loan origination volume slightly declines from 2020. Gain of sale, which is a big number, it's basically like a profit margin number, falls from 4.52 a year ago. So what does it mean? And actually, let me go back up here real quick. Do the same thing I did for the other stocks. Here's your 5-day. Rocket actually had some momentum leading into earnings, got up to almost $18, dropped on some of the negativity, slipping a little bit more today. I liked the earnings report. I liked where they're going, and I'm super excited to close the books on 2021. Not because Rocket is doing anything wrong. It's just the comps from 2020 are so high that it's very difficult for them to compete in it. And this is a company that I think is going to do some good things for me. And I'm excited to hang on to my shares. I'm going to sneeze. Excuse me. Goodness. So I'm not going anywhere with Rocket. I am strongly considering adding another 100 shares at $17. I just need to go through the earnings report and read the whole thing before I do that. It's going to be this is a long-term stock. This is a slow burn. This mortgage volatility market that we're in now is going to make comps all wacky and wild. But if they gain purchase mortgage share as they continue to progress to that, that will change the sum of this up and down that we keep seeing, because I do think that the housing market, certainly in America, will be strong. Prices may fluctuate, but the market itself will have strong demand for the foreseeable future. At least that's how I'm looking at it. And by the way, Let me take a look at the 10-year real quick. The 10-year is below 1.5 at 1.46. In fact, it dropped 3% today. So interest rates, they're not going to go through the roof, okay? And if you need a house, you need a house. So it will affect refinance, but I think that, refinance situations change all the time. Everybody jumped in 2020 because of the world that we lived in during that time, and they did a ton of cash outs or house projects, whatever. And obviously that volume slowed, and I would say that volume probably slows again in 2022. The difference, though, is getting 2 years away from 2020, you're not going to have the same comps, and everyday situations will be dramatically different over a 2-year cycle. So while some people may have done home improvement in 2020, 2022, there might be some refinance activity to pay off debt, potentially to go on vacation, and maybe upgrade houses, things like that. So, through the rest of the year, I don't expect a lot of rocket. However, I'm hanging long, and I thought it was a good earnings report despite the dip we saw after. Let's see, what do we got next? All right, Square. This is the last one I'm going to cover today, guys, and then I'll chat with you and answer some questions. Square dips 3% as expenses continue to grow. Strong year-over-year gross profit from both Seller and Cash App on a 2-year CAGR basis. However, expenses continue to rise as Q3 revenue declined. There's the thing about Square, and I'm going to try to highlight a couple of these. They called out expenses quite obviously. Q3 gross payment volume of $45 billion increased from $42 billion in Q2. So that's good. They didn't put the from in there, but that's what they should have done. And it was $31 billion in last year. So this number, good, 31 billion to 45. Adjusted EPS of 37 cents, matched analyst estimates, but was a little less than Q2 and just barely above last year. Total net revenue of 3.84 billion trails 4.48 consensus and declines from Q2, and that's a pretty big decline from Q2. So that was sort of a chink in the armor, if you will. Excluding Bitcoin, total net revenue was $2 billion versus 1.96 in Q2. Transaction-based revenue increased 40% year over year. Cash App, and this was another one that was a hit. Cash App generated $2.39 billion of revenue in Q3, up year over year, but down almost $1 billion from Q2. Okay, so here's the thing. I'm hanging on to Square. By the way, it took a small dip after this, which kind of makes me laugh a little bit. I'm glad it took a small dip, but for some of my stocks that got absolutely blasted, I felt like this one deserved probably to get a little more blasted. Yet a high at 254 right before earnings. It did drop. Now we're at 242. On Monday, you're at 253. I thought it was going to go a lot further down. I really did, because we're seeing slowing in Cash App, right? We're seeing some costs slash expenses that are going to chip away with those earnings and those profits. Square needs a new shiny object. They really do, and I said that 2 or 3 days ago on this channel. Cash App now, the explosive growth of Cash App seems to be over, at least temporarily. We don't know. They could release new features that could explode again. But penetration seems to have gotten to a point where Cash App isn't going to be 150% every single year. So now if Square wants to live up to what many would call lofty evaluation or lofty valuation, then they need to keep adding things and they need to start soon. So we'll see if that holds true. Keep in mind that the Q2 earnings, which we saw earlier, some of that in there is the tax refund, COVID payment type revenue that got lopped off in the second half of the year, right? So if Q2 is April, May, June, and Q3 struggled to compare to Q2, part of the reason is you're missing IRS tax refunds that go into the Cash App. Many people use it as a bank account, particularly at low income levels. You had COVID stimulus type money that traditionally goes into Cash App. That starts to dry up here as we enter the back end of the year. So those things put pressure on Cash App to stimulate what sort of transaction revenue that thing can bring. As I've mentioned before, Cash App caters, in my opinion, to a lower income demographic, people who do not have banks, people who do not want to bank at a traditional bank. And because of that, when this free money dries up, well, that takes a big hit out of Cash App transactions. So be on the lookout. I'm not selling Square. I much prefer PayPal. However, I think you got to keep your eye on Square going forward. And for me, I'm just holding my shares. And I wouldn't add any Square. I'm not saying it will go under $200, but I certainly would not add any at this 242 level given today's report. All right, let me get a drink here and then we'll do some questions. Thanks to everybody for joining, by the way. Appreciate it. Montero, I want to get a full grasp on what you look for when valuing a stock. So there, like, I would say the biggest three things is as much projections forward as possible. So wherever, everybody has a different formula. There's a lot of popularity with free cash flow, enterprise value, all that stuff. I look primarily at forward revenue projections, forward EPS projections if available, and then I like to read through the earnings presentations, not necessarily the 10Qs that you hear so much about. I kind of like the slideshows that they do because they'll tend to bring up the stuff that they think is the most exciting, and it's a lot easier to digest. Let me see if I can find one here. Earnings. So it's easy on Seeking Alpha because they usually post them at some point. I don't see one yet on here. I do think Etsy had one though, so 1 second. I haven't gotten into it. Here we go. These little things that you can find on any investor relations page. This is, when they have a conference call, they have a deck that goes with it. And there's all kinds of stuff in here. You have to be careful. Let's just say for a dishonest company, could probably make these pictures and statistics out maybe more positive than they should be. But going through here kind of tells you what's exciting at the company for the future. So beyond just a hardcore revenue projection, you kind of have the reason why things are working, why are they not working, what's coming up. I'll be going into this Etsy one on detail, but to me, not enough people click through these. And I get the take that they're biased views, right? So Etsy's not going to put we suck in there, right? It's always going to be like, hey, this sucked, but we are changing things around with this. So you kind of got to have an open mind, and you got to be like, okay, call a turd if they put one in there. But, you know, best you can do on revenue projections, EPS projections, it's usually helpful, I've found, to have a ton of sources for that information. So whether that, you know, consensus revenue and earnings estimates are one thing. They can be tricky because consensus is an average, right? So the low guy and the high guy kind of screw it up if you don't have a ton of analysts on a stock. So like Facebook, Google, Apple, those are the easiest ones because they have like 80 people who put in their projection, and it usually simmers out pretty good. Not to mention those companies make a lot of money, so there's only so high they can go. But when you get into a smaller stock, and let's just say it's got 6 analysts covering it, man, that consensus could be a little volatile. So you kind of got to go against the company's projections. What are some analysts thinking? What is their track record? So when I show TipRanks on here quite a bit, and you know, some people make fun of it because they're like, oh, you know, analysts are always wrong. But what I like about TipRanks, and I'm just going to pick one, I'm just going to pick CVS because it's right here, is like you get the individual, right? So instead of, let's see what this consensus is. On CVS, they're doing 108. The first person who came in yesterday is at 107, 115. So you see the spread in there, and you can actually go to this guy, George Hill. I have no idea, you know, who he is. And then you get a feel for like, hey, George has studied this one. Okay? He has been in this thing since 2014, or following it at least that long. So I would be inclined to say, without knowing much about George, that I'll give him the benefit of the doubt that at least he knows the business. Okay, and maybe I even want to read more from him, so I'll do like a Google search, and that's LinkedIn, TipRanks. You get the picture. Maybe that guy would have a Twitter or something that I'd want to see. So that's kind of where you go for EPS and revenue projections. That's how far down the hill you can go. And TipRanks is a great tool, and I'm sure there's others, right? You know, I do make some affiliate money from TipRanks, so just to be fair, but I use it all the time. And that's the big reason why, is because consensus analysts, as a consensus, I think they tend to cancel each other out. They're good for a general impression of a stock, right? So let's just say Apple. If everybody has buy, then you know that, okay, people are feeling good about it. But if it's one of those tougher stocks, let's take SABR right now. SABR business is changing a little bit, or Zillow, another one of mine that I didn't cover for some reason today, probably because I just did a full video on it. Zillow, business is changing. Analysts are going to be all over the map. You need to dig in and figure out what is the bull and bear case from each analyst. And then ultimately, the hardest part about investing is, which side do you believe? And you have to pick a side, right? You can't, you have to pick a side or not invest, I guess I would say. You know, for the Zillow case, as you guys might know, when I did the video, I remain positive about the recent news. I was not in at $200, so I haven't lost a ton of money yet. It's trading about 65. I will add down and see how this thing goes, because I believe that it was actually a good thing in the long term. There's a zillion people out there who disagree with me, but I think there's a nice camp of people who agree with me. So hopefully that helps. The rest of the fundamental stuff is more or less eyeball. for me. You know, debt is a big concern. SABR's got a lot of debt. And you just have to make a gut call on it. Like, do you think that they can service it or not? And that's where the cash flow and all that other stuff comes in. So it's a simplistic view, really. I'd love to tell you that I have some algorithm spreadsheet that I'd sell you and it would solve all your problems, but that does not exist. So, all right. Let's see. Derek, I've been on fire lately. Hard to miss. Man, just killing me with that one, Derek. I have not been on fire, but congratulations to you. Goosenheit from Dave Schmarter. I wonder if that's I'll literally have to translate that, but it's good, Dave, that you joined the live stream. I know you've been a long-time commenter. Derek says, I think I asked last time, but can you see if anything looks alarming to LRCX? Yeah, let's see. LRCX, Lamb Research. So year to date, 478, 611. P/E ratio looks solid. Now, as Derek knows, because he studies semiconductors, this is a very low P/E ratio, but that is the norm in semiconductor, particularly the manufacturers. So that's the other thing that's just kind of like experience. So you guys know that I don't do much in hospitality, or not hospitality, medicine, healthcare was the word I was looking for, pharmaceuticals, etc. I know the broad range of P/E ratios for the stuff that I study, but you can't be good at every sector. So if Lamb, let me go back here for a second. If Lamb's trailing 12 months is $29, or 29 on the EPS, they are in fiscal 2022. Your consensus is 34.63. So this is, to me, this is a positive, right? You're going last fiscal from 27 to this fiscal at 34, a little bit lighter in 2023, so that's something to pay attention to. And you've got plus 21% revenue growth from 14 to 17. Next year, though, you get into that single digits, but that's a ways away. So there's something here. Let's see what kind of money they got going on. So $15 billion coming through the till. $4.6 billion in cash, total debt of $5 billion. Now this is just the quickie eyeball. So somebody was asking about fundamentals. So debt of $5 billion, that's obviously a lot of money for you and I, but just on the highest level, they have almost that amount of money in the bank, which is great. And more importantly, they're bringing in this kind of money arguably every 12 months, right? And we saw that revenue projections for next year are good. So I'm not super worried about this debt level. Now, this is the Yahoo version. Sometimes you got to go in, I would say more often than not, you got to go in and just see like how accurate these numbers are, how much is long-term debt, how much is tied up to other things. But, generally speaking, short percentage of float in October, 1.7. So there's not a lot of haters out there, which is good. The only thing this tells you, or only thing this tells me, is how many haters there are and how many people think that it's overvalued. I'm going to look at it in that new stock Rover platform I've been using. Because they assign a fair value that's based on free cash flow. And it's a little more complicated than what I typically do. What is that ticker again? Because I have to type in LRCX. There we go. All right. So they have a fair value of 754. Green scores across the board, which is good. Medium confidence, and then they tell you why. I'll probably have to read it for you because the text is very small. The fair value calculation is significantly different from the more academic version where cash flows are forecasted into perpetuity instead of using an exit multiple. This difference adds some uncertainty. So that's a little bit over my head to explain, to be honest, but it seems like they're projecting into infinity with this particular stock. So they're just saying there's a slight risk there, but a 24% margin of safety. And then let's go down and see what they think. So they're in the current fiscal year of 2022. They're calling 3.8 next year with a 5% EPS growth and EBITDA growth of 15. Ratings versus peers, this is probably pretty good. Overall score of 84, efficiency of 100. If they're down on anything, it's financial strength, but unfortunately I don't have the explanation why. I'm just eyeballing it. Then we got competitors from a PE standpoint. So Lamb at 20, and that's trailing 12 months. They're down. I mean, even Applied Materials, which I think is a fair value the last time I looked at it. Some of these other ones that don't really move much, Texas Instruments. So I don't know. The eyeball view says good. They have that football field thing I've been showing. 1 second here. Here it is. So I love this chart. This football field evaluation over the past 5 years. So the current PE over the past 5 years, the current of 20, slightly below the middle point. EV to EBITDA slightly higher. Price to book slightly higher. Price to sales about even. Price to cash flow about even. So, I look at this and I say at the current price, it's certainly not, I wouldn't call it overvalued by any stretch of the imagination. And at least according to stock Rover and some of the EPS projections, that appears to have a margin of safety. I forgot to look if it had a dividend. LRCX. Let me just check that real quick. Some of them do, some of them don't. Yep, you got a 1% dividend according to Yahoo on today's price. So, yeah, I think there's something here. Now, the only thing that I saw in there that is going to be interesting is how 2023 materializes, because obviously the closer you get to 2023 and that single-digit revenue growth, if that holds, you'll start to back down on your valuation multiple, right? So I think everything's good today, heading as we enter fiscal year 2022, which they're already in. Everything is awesome. As soon as we get to, let's just say, 4th of July, August, something like that of next year, people are going to start looking at their stock with Lamb Research, and they're going to see single-digit growth projections, and they'll, the price that they'll pay for that will obviously go down. The catch to it all is sometimes projections are wrong. So if you get in today and you have a gut feel about Lamb that next year's single-digit projections are wrong and you see it more like 10, 15, 20%, then you probably have a rocket on your hand for sure. Okay, Jason, buy the dip on Peloton. Man, I haven't done enough research on Peloton because it went so crazy. during the pandemic, but you and I are thinking similarly. Then the sentiment is so low on that stock right now, so low that it's, I'm interested. I'll say that 34%. Wow. It's just hard to even imagine. You think Zillow? I don't think that this was as bad as Zillow. I'd have to look over the past year. It's going to be close. January or November of last year, 126. Today at 56. High this year of call it 165. Anytime you see that, I think you have to stare at it. Morningstar did have a fair value of 98 on it. I don't know that that's been updated since the earnings report was so recent. It's probably going to take a little while for these projections to change. Right now, finished the year minus $2, but see, all this stuff is going to change so much. And then the sales, plus 33 is good. I think with the good news with Peloton is you can wait. I would let the dust on this settle slightly to start getting some new projections. One thing that attracted me to Peloton in the news stories I read, but I do not know how true it is. So I'm going to encourage you guys to do your own research. My understanding from a news article I read was that they're having supply chain issues, that they have more demand than supply, and they were having logistics like shipping issues. So if that's the case, it could be attractive. I have to study more. It is one I'm watching. Anytime something drops like this, you got to think about it. And you guys know how I feel about Zillow. I was lucky. I was only at about 85 some odd dollars at Zillow. It was roughly $65 last I looked. Buying little shares, little segments of 10 for Zillow for a little while. I believe that that today's news or today's sentiment is super low and Zillow can outperform. That's what you got to get to in your own research on Peloton. And the reviews on the equipment and the general demand and the TV commercials, it's there. Let's try to figure out how bad these supply chain and logistics problems are. Can they be solved? Is it realistic? How's the margins? How can they bounce back? I don't know. I got to figure that Q4 for Peloton has got to be one of the best quarters, right? Like every other e-commerce position. And then I would even argue maybe Q3, Q1, January, February, March. So January, I mean, does everybody still try to lose weight on January 1? So you got like a couple kick-ass quarters coming theoretically. I just don't know what's in the cards. Derek says, is it interesting? Charlie Munger is loading up on Baba regardless of his vision. It validates a lot for me. Yeah, I like Munger. I can't tell you that I know a ton about his history or his investing history, but his little quips and quotes, he is for sure my favorite person to listen to. He's an awesome interview to listen to because people send a lot of softballs his way and stuff, and he is just so like, what the hell are you talking about? Or that's the dumbest idea I've ever heard. I find it entertaining, not for everybody. Derek says, I know you're out on China in general, but is that not because the numbers can be funny? That is correct. So I don't believe everything I see over there, and the gap principles that they do not follow in China, and the auditing principles that are not followed over there is a problem for me. And I think Alibaba, though, is the safest out of all of them. I just can't wake up. It's hard enough, man. I just can't wake up and have something weird, some Luckin Coffee thing come out, some government mandate. Luckin Coffee, by the way, bounced back. It's just too much, man. We are trying to project revenue and earnings in the future for companies that may or may not have a sellable product in the future, right? So it's hard enough. I don't need the extra catastrophe to happen, but I'll bet $1 that most of the folks that buy BABA today are probably going to be happy in 3 years. I just don't have the stomach for it. All right. Oh, Gesundheit, Dave. Sorry. My brain wasn't working that well. Montero PE over 25. The lower the PE, the better, Montero. And it differs across industries. So manufacturing, industrial, it's going to be super low, like 10s in a lot of cases. But technology, not that a 25 in tech isn't good, but good luck finding it is what I would say. Montero, although it's so low, Peloton, wouldn't you agree it has to cover that gap? I would agree, and I think next week's going to be interesting with companies like Peloton, Zillow, some of the other dogs. 1 second. I have a list of dogs. You guys probably can't see it. That's okay. Peloton, Zillow, Lightspeed, Chegg, Apps, Activision. Activision is interesting. They just got so many problems. But they delayed their franchises. I don't know. I'd love it to, it's hard to argue video gaming in the future. I think, every investor probably says that that's a growing world. Activision is, man, they've got talent problems, I think is the biggest part for me, why I can't jump on that one. They've got the brand, they've got the franchise, they're stuck in delays, they're stuck in sexual harassment stuff. Those are solvable problems. But if your talent leaves, particularly in that field, if your talent and if they leave and you don't have any talent, if you're hiring me to build the next video game, then we're all screwed, right? And I'm not saying that's what they're doing, but I need to let it simmer. I would probably feel better about Peloton than Activision over the next 12 months. Put it that way. All right. Hey, it's LD. How you doing? Holy hell, NVIDIA is now an 800 billion company. Getting the hell out of the markets. I don't blame you on that. Did you see my comment on Rocket earnings? There's a lot of interesting stuff in their earnings report. No, but I'm glad you wrote that because I'm not sure when you were able to jump in, but I was showing folks an earnings report from Etsy and talking about, in my opinion, that there's a lot of cool stuff in these slide decks, right? About what's going on at the business, etc. I can promise you, even if you don't like Etsy, Etsy is a good one to read because they get into the details like these features on the app, blah, 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 blah. I like PayPal's too. They're not all numbers. They scope out broader and talk about how they get into the whole universe of money. But LD, I have not fully read the Rocket earnings. I am staying. I am possibly adding more. I just have to think about it. Oh, and Val, so I was talking about, you said Activision. Now I'm starting to get confused. Okay, yeah, we're talking about the same thing. Activision Blizzard bouncing back to almost flat today. I just did my whole thing on talent, right? So hopefully you heard that. I do worry about talent at this place because we know that there's a shortage of developers in the world, competent ones anyway. And I don't know. I'm just going to have to dig in and just see what I think. I love the concept of adding a video game stock that's down 32% from its high. Let's see, 5-year chart. So let's go to Corona times, $42, roughly $43 on the Corona bottom. Now you're at 68. Morningstar fair value of 97. I wonder if that changes. I think you got time here. I really do. I just think that these problems are not fixed tomorrow, but it's one to look at, and it's certainly intriguing from that price drop. I mentioned earlier that Peloton, I'll take Peloton over Activision in their current states. Short term, 12 months, right? Things that we know and can see forward. And a lot of that is because I don't think the harassment suits, the developers leaving, and the game franchises that they have delayed get fixed next quarter. I don't think any of that gets fixed. But Peloton, I could see, I don't know if they can fix everything, but I can certainly see sales in the holiday season going up and then again in January. So, whatever my opinion's worth. Just joined, Square's down after earnings. I covered it earlier, Citizen M. Long story short, they need a new shiny object, is what I said. And just be, I'm not selling Square, but I am not buying Square. And they need to come up with a new release of something. It doesn't have to be a brand new product. It can be a Cash App functionality. And now that the merchant business is coming back in a strong way, add something there. I don't know. I live in Cincinnati, Ohio. I went to a Bengals game, which is the football team, and they don't do cash at the stadiums anymore because of COVID, and they all had these Square meter things to run your card. Every beer guy, hot dog guy, whatever. So it's very interesting. Hopefully that's good news for Square going forward. Christian, I don't know DCPH off the top of my head. Pharmaceuticals, unfortunately, I'm not going to be able to help you. LD, last time Rocket shot up on 5% dividend. Now they purchased 7% of their float. Only one of those is tax-free. That is true. If you want a video game stock, buy Nintendo. 6.5 EV EBITDA, 50 billion market cap. I don't disagree with Nintendo. I will say they probably went down because I don't know if you guys saw Nintendo, if I can spell it, basically came out and said, you know what, we don't have enough. We're not going to be able to fulfill holiday demand. Rather matter-of-factly. High of 78 this year, down to 55. Let's see what their COVID price was. 42. Is it on? Here you go. Says chip shortage hitting hardware. Chip shortage will limit supply of Switch consoles, but that's okay, right? If you're investing, to LD's point, like that's the kind of environment that ideally you buy in, and then whatever happens next year. I don't know a lot about this stock. A quick eyeball test of a PE, in 13 looks pretty good. I don't know what's in their pipeline. They don't have anyone. Oh, it's OTC. So they're not going to have too many people making projections on it. You'll have to dig a little deeper. All right. Fantasy Investing League. Derek, I like it. Has a fantasy allocated amount. I'll look at that. That could be fun. I need to find a platform Like, there's no way in hell I'm going to be computing that on my own. But let's see if we can find a place that does paper, like a paper money thing. I'd be in on that. And Val, Skyworks is looking good. Was happy for Skyworks people. I have circled Skyworks several times over the past 3 years, and I've never pulled the trigger. I just think it's a solid company, and they continue to outperform. I get suckered into like the Apple scare tactics, if Apple builds their own chips, which they have, but if they get into that audio space. But hey, man, results are results, and Skyworks is rocking. All right, guys, with that, I am out. I'm going to go get some lunch. I hope everybody has a good weekend. Really appreciate everybody joining. I'll have more in-depth looks at my stocks and portfolio after we get probably through next week, because we've got, I believe, PayPal. It's a couple good ones next week. You think it's over, but it's never over. PayPal Smile Direct, that should be interesting. And there's probably a couple others I can't think of. Let me double check that PayPal. I had it down as the Monday or Tuesday. Doobie. Gosh golly. If there's one thing Yahoo is good at, and actually they're good at a lot of things, it's putting the freaking earnings date right in front of your face. I really, really like that. And every other site that I use buries it for some stupid reason. November 9th is PayPal Day. If I had to eyeball my world, I've had an Etsy win, and then some mediocre all the way down to losses. I could use a PayPal win. That would be huge. And a parting thought before I go that I thought of today with the Expedia news and the news that, who else was in there? Airbnb. And gave you guys the lowdown that, travel's looking pretty good for Q4. Visa, don't sleep on it. It's not going to be a 600% stock, okay? So if that's what you're looking for, that's not it. But slow and steady, better than a savings account. I think that this resurgence in travel that arguably seems to have a good chance to begin in Q4, keep going up from there. Visa's a way to play it that's not overly expensive. Small dividend. Like I said, I feel really good about it, and take a look at it. So, all right, guys, have a good weekend, and we'll see you next week.